So I think the platform that has been hit the hardest in this correction is the genomic revolution.
This is not a new studio. I am presently in Poland on holiday, so I am just going to bring you guys up to date about the situation of the market. Then I'm going to show you guys a video of an interview from ARK Invest CEO that I believe you guys should watch from beginning till the end, where she spoke about the genomics revolution and what she expects next year. Okay, so Bionano Genomics closed 3.34% today. Luckily, the market started crazy, guys. I mean, while I was driving, it took me about 6 hours to get to where I am presently. While I was driving and I took a look at my telephone, I saw that the entire market was completely red. Then after a few hours, before the closing, I checked my phone once again. Then I realized Bionano Genomics was green and some other stocks, started to turn green as well. So a big shout out to Jay. Okay, Jay posted this comment. Now, this is it. After Bionano Genomics announced that they have launched the version 6.1 of biodiscovery NS clinical software for genome analysis with expanded capabilities for visualization, interpretation, and reporting of next generation sequencing data in genetic diseases and cancer. I told you guys that the acquisition of biodiscovery has now given us access to next generation sequencing data. Okay, now this is what the CEO of Bionano Genomics said. Okay, he said, big deal. NX Clinical will be used by more people using NGS and microarrays, helping Illumina customers become Bionano customers. Okay, now this is a big deal, guys. You guys already know that Illumina have thousands of customers out there. I mean, they have literally installed over 10,000 devices, okay, in laboratory sequencing labs out there worldwide. And of course, Illumina is the biggest whale in the room. Okay, now, if Bionano Genomics CEO is suggesting that this update is going to help Illumina customers to become Bionano customers, I believe this is a super positive news. I mean, I need the CEO of Bionano Genomics to tell us more about this. I need him to emphasize, the importance of this news, because most of us don't really understand it. And we just have to wait till his next meeting or during the fourth quarter earnings call for him to tell us more. I mean, I would love to hear more from Erik about this statement that he just made, that this is going to help Illumina customers to become Bionano customers. I mean, Illumina has thousands of customers out there, guys. And we already know that Bionano Genomics needs more customers to install the Sapphire device in their labs. Okay, so that is one thing that I am still going to be diving in, because right now I'm on holiday, so I can't really, talk much about this. But I just thought I should share this with you guys, and please let me know in the comment section what you guys think about this. So I am going to show you guys the video of Cathie talking about genomics revolution and why she believes genomics is the place to be if you want to, 10x your money, for example. She made some statement that I believe you guys should listen to right after the intro. What up, investors? It's your boy Dayo. Welcome to Frunkla Investment, where I talk about Bionano Genomics on a daily basis. From Sunday to Sunday, I try to post at least one video. If you would love to learn more about Bionano Genomics, this channel is for you, okay? Feel free to subscribe to this channel, join other members of Bionano Genomics, those that are also invested in this company, and come here on a daily basis to learn more about their investment in this company. Whatever I show you in this video is just for educational purpose only. The financial market is a very dangerous place and you can lose a lot of money. Always do your own due diligence. Don't sue me, bro. Let's get to it.
Our focus is solely on disruptive innovation. We are not a generalist portfolio team. We are focused on the five platforms, innovation platforms, and 14 underlying technologies. Our analyst responsibilities are broken out by those technologies. They are specialists when it comes to the technologies and generalists when it comes to the sectors. But we're focused only on disruptive innovation. And we have a study up on our site which would suggest that because most asset allocators are short innovation in the public equity markets, that if they were to include our portfolio, let's say our flagship portfolio, perhaps 10% of their equity allocation to our flagship. And then if they were to use the benchmarks for value and growth over a 5-year period, and we did this study based on facts, our own experience, over a 5-year period, ARC's strategy would increase returns and lower risk because the correlation of our returns with other strategies is very, very low. So that's the primary reason we depend on asset allocators, advisors to allocate as much or as little to our strategy. One thing I will say is, given the massive amount of innovation taking place right now that is going to be highly disruptive, we do not believe that most asset allocators have enough allocated to innovation. And I think that the traditional benchmarks talk about risk because of these innovation platforms, DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technologies, because those are going to rip through the traditional world order and disturb it mightily, that those benchmarks are probably where we're seeing the bubble today. I know what I find so interesting about movements in the market today is the fear of interest rates and inflation picking up really started in February of this year as people were getting vaccinated. And the markets went after our strategy to express the risk and basically shorted our strategy. What I find so interesting about this is that the market's multiple, broad-based market, so S&P's multiple on next year's earnings is at 24 times. NASDAQ's is at 31 times. These are near record highs, except for the tech and telecom bubble. If inflation is really the risk out there, why isn't the entire market's multiple coming down? I remember when I started in the business, late 70s, early 80s, Art introducing me to Capital Group on the West Coast, and I'll be forever grateful. Back then, I think by the end of the bear market in 1982, the market's multiple was down to 6. I just mentioned that we're up to 24 on that basis right now. Now, you're going after multiples in our space, and what has happened, the depreciation in our stocks from mid-February to today has not done anything to our forecast. We're now just getting our forecast. We're now just getting our companies and our stocks at lower prices. So in mid-February this year, as we did our 5-year forecast, and we assume massive multiple compression during the next 5 years to something like FANG multiples, EV to EBITDA in the 18 to 20 range. When we did that in February, at the peak of our strategy, the compound annual rate of return we expected from our portfolios was roughly 15%. Today, doing that analysis, some of our projections have increased. The compound annual rate of return we are expecting is close to 40%. So in February, we were expecting a doubling over 5 years. Today, we're expecting nearly a quintupling over 5 years.
Can I tell them a little bit of a personal experience with you, Cathie? As you know, I've grilled you over the years on your picks. You now publish them right along with everything you buy and sell. But I can't tell you, I got in Illumina, NVIDIA, Bluebird, Tesla, all of these back in the early days because of you. I didn't even know how to pronounce the names. And, when I look now at retroactively just how amazing you were in doing what you did back then. Can I ask you just sort of where you're looking at the markets with all your platforms? I think it's 5 platforms you do. What are the areas you really think are big winners coming forward, and what are the losers? And by the way, I don't want you to mention Biden in the loser category. That's my job. I'm just joking.
So I think the platform that has been hit the hardest in this correction is the genomic revolution. And the reason is many of these companies are losing money. We're in this is a movement in its infancy. And I think the most exciting thing is we can now isolate mutations in and among our 6 billion bits of code in our genome. So 3 billion base pairs, 6 billion bits of code. Until recently, we could not isolate those mutations. Mutations are the earliest manifestation of disease. And now what we're beginning to understand is the convergence between and among DNA sequencing, artificial intelligence, and CRISPR gene editing, as well as other gene therapies, is curing disease. We have functional cures now for beta thalassemia, sickle cell disease, ATTR. Now, these are blood-related diseases, but the companies involved are now focusing on some of the most complicated diseases like diabetes. And what we're learning from companies like Freenome, which is a private company focused on the convergence of AI and DNA sequencing, we're learning that the body sets up for disease, and that artificial intelligence is able to discern when that setup is taking place. So wouldn't it be wonderful to discover cancer in phase 1 or stage 1, or maybe even before it starts, before the cells start replicating? So the genomic revolution fund that we run has been hit very, very hard this year. Now, it had a magnificent last year, up 180%. I think it's down 35% this year. We're probably more excited about that opportunity in terms of how it's going to transform lives